Have you ever wondered why bank ads talk about the financial freedom but charge you for breathing near a saving account? Welcome to Top Finance, when we break down money myth in the smoldering remains of financial literacy. Today's roast: banks, specifically how they use interest rates to confuse you, control you, and quietly siphon your future. Let's talk about compound interest, APY, APR, and the billion-dollar scam powered by your confusion. Quick test: do you know the difference between APR and APY? No? Perfect. That's exactly how bank wants it, because when you're confused, you're compliant. You don't ask why your saving account earns 0.01%, but your credit card charges 29.99% APR and sends you a thank you email every time you miss a payment. Banks don't need to rob you, they just make the math blurry and wait. They show you the numbers that sound smart, terms like simple interest, compounding frequency, prime rate, adjustable variable APR. Sounds so official, sounds so trustworthy, but really it's just math weaponized against people who stopped doing math after high school. Okay, let's break it down like they won't on their website. What the hell is an interest anyway? Interest, the cost of borrowing money or the reward for saving it. Simple interest, the flat percentage applied to the original amount. Compound interest, you get charged interest on the interest. Think of it like this: if debt were a fire, compound interest is gasoline and the bank's holding the lighter. Now two key terms: APR, annual percentage rate, what you pay to borrow, doesn't include compounding. APY, annual percentage yield, what you earn on savings, includes compounding. Notice the trick: when they owe you, it's API and sounds low. When you owe them, it's APR and sounds lower than it really is. Translation: they inflate their generosity and hide their greed. Let's talk savings. Your saving account is a joke. The average saving account gives you 0.01% APY. You could literally collect more interest by finding coins under your couch. Meanwhile, the same bank will lend your money out for 7% car loan, charge someone else 19% on a credit card, make tens of thousands of your deposits, and then give you back $2 a year, before taxes of course. Thanks for being a valued customer. Now let's talk about where they really eat. Debt is where they feast. Debt, credit cards, mortgages, student loans, car loans, buy now, cry later financing plans. They don't want you to pay it off fast. They want minimum payments forever, because that's where compound interest get juicy for them. They don't make money when you pay it in full. They make money when you linger in debt like it's a toxic relationship. Did you notice what a nice big buildings they have? Here's a stat they don't want you to Google. If you have a $5,000 balance on a credit card at 25% APR and you only make the minimum payment, it could take you over 20 years to pay it off, and it costs more than 4 times in interest. That's not a credit product. That's a trap with branding. Here's the good news: if you understand how interest works, you can weaponize it back. How to flip the script: paying down high interest debt like it's on fire, because it is. Automate your savings into high yield accounts, not the sad 0.01% ones. Learn the actual numbers, not the marketing ones. Avoid carrying balances. Credit card points aren't worth your soul. Compound interest is either a parasite or your ally. It depends who's holding the calculator. The banks know it. They've known it for centuries. That's why they teach you everything in school except how loans work. The bank isn't your friend, it's a machine, and the less you understand the settings, the more it profits off your confusion. So yeah, bank doesn't want you to understand interest rates, but now you do. Drop your worst bank fee in a comment. Got charged $35 for being 0.02 under? Capitalism at its finest. This is the tough finance. Stay cynical, stay solvent, and stop letting math you don't understand ruin your goddamn life.